Bismillahirrahmanirrahim. In the previous class, we discussed about the procedure of internal check over purchases and sales. Today, we are going to start the next chapter, chapter number 6, and this is the last chapter of our course contents. The verification and vouching. In this chapter, we will discuss about the meaning of verification and vouching, that what is the meaning of these two terms. The techniques of verification, different techniques of verification, discuss the procedures of verification, different procedures that are used for verification, discuss the steps of checking the share capital of a new firm. When a new firm is established, how the auditor will check or what are the steps for checking the share capital, and discuss verification of important balance sheet items. How balance sheet items will be verified. Now, first topic is introduction to verification and vouching. Now, these two terms, there is a difference between these two terms. The first thing is verification. Now, verification means confirmation or providing the truth about the asset and liabilities appearing in the balance sheet. Whenever we are making a balance sheet, in balance sheet there are two important items: assets and liabilities. Assets and liabilities. And the purpose of verification is the confirmation. Confirmation or providing the truth about the assets and liabilities appearing in the balance sheet, whether the assets and liabilities which are shown in the balance sheet, these exists or not. We are going to confirm in verification, we are going to confirm whether the assets and liabilities which are shown in the balance sheet actually they exist or not. Auditor has not only to check the arithmetical accuracy. One responsibility of auditor is to check the arithmetical accuracy, that mathematically the financial statements are correct of the accounts by vouching only. He has also to verify the assets and liabilities appearing in the balance sheet to satisfy himself that these are correct. He will check whether the assets and liabilities which are shown in the balance sheet, these are correct or not. Auditor will also check the existence of actual items. For example, land, building, machinery, these are shown in the balance sheet. So he will check whether these things relate to the company or not, and their actual position, whether the position of these assets, it is with the company or not, held by the company concerned. So here, basically, we are checking whether the assets, land, building, machinery, furniture, and other things, these relates to the business, to the concern or not. Building, which is mentioned in the balance sheet, checking whether the land, the building, the machinery, the furniture, all those assets which are shown in the balance sheet, cash. So these things, the company shown these things in the balance sheet, whether these are actually the property of the business or not. Actual, we are checking whether actually these are related to the company or not. So this is basically verification. We are checking the legal documents of land, legal documents of building, machinery, furniture, and these things, right? These are related to the company or not. So we are just checking this in verification. We are not concerned with the mathematical accuracy. We are checking basically the actuality, whether actually these things relate to the company or not. We are not concerned with the mathematical accuracy. Okay, mathematically you shown it, fine, it is fine. Mathematical checking, it is basically vouching. Vouching is basically concerned with the mathematical accuracy. We will discuss vouching in the next slide. So verification means checking the balance sheet, the incomes, the balance sheet, assets and liabilities, whether these are actually the property of the concern or not. What is vouching? Vouching, it is derived from voucher, checking the vouchers. You know about the vouchers. Vouching means a careful examination of all original evidences. Vouchers are what? The evidence of an entry. So vouching is concerned with vouchers, checking, careful examination of all original evidences to prove the accuracy of the entries in the books of accounts, and to ensure that no transaction has been omitted from the books. And we are checking that nothing is missing. There is no transaction which is missing, which is omitted from the books of accounts. So vouching is concerned with vouchers, I'm telling you. Checking the vouchers, checking the original evidences for the arithmetical accuracy of the books of account, for the accuracy of the entries in the books of accounts. So vouching means to verify the transactions recorded in the books. Mathematical accuracy. We are checking the mathematical accuracy in vouching. Anyhow, vouching refers to transactions and verification of the statement of an asset and liability. Vouching is concerned with transactions. Single transaction. We made a sale. So for sale, you will pass an entry. Account receivable to sales. This is an entry. So with this journal entry, in support, there will be some documents. That is basically a voucher. So we are checking these documents, these vouchers. This is vouching. And verification, it is concerned with the actuality of assets and liabilities. Whether actually the assets and liabilities exists or not. The legal documents of land, the legal documents of building, checking personally, making personal visits to check the assets and liabilities. Objective of verification and vouching. The object of verification of asset is the satisfaction by the auditor as to its existence, proper disclosure, proper valuation, correct ownership in the balance sheet. So the purpose of all these this verification and vouching. So the object of verification is to check, to making sure the existence, that these are properly disclosed or not, that these are properly evaluated or not, and the correct ownership in the balance sheet. So these are basically the objective of verification and vouching. Techniques of verification. There are different techniques used for verification. First, we will check the existence of assets. The auditor should satisfy himself that such assets and liabilities which are shown on the balance sheet really exist on the date or not. We will check the existence. Okay, you wrote that land is equal to $1 million. In that you mentioned two pieces of land, 1 and 2. There will be a personal visit and you will check whether the land actually exists or not. The building, you will check the legal documents, the ownership documents. Similarly with building, similarly with machinery, you will go to the plant, production department, you will actually check the machines, you will check the furniture, whether it actually exists or not. The second thing is proper disclosure. In the balance sheet, we will check whether proper disclosure is mentioned or not. The auditor should also satisfy himself that each item of the assets and liability is being properly disclosed as required by the law. We will check whether, okay, the disclosure, it is according to the required law or not. Whenever there is some important item, so you will disclose these important item in notes below the financial statements. I told you about disclosure, that what is disclosure. Ownership of assets. This technique is used for establishing the ownership of assets and liabilities. Those assets which are shown in the balance sheet must be property of the client. We will check whether these are the properties of the client or not. These are the property of the company or not. For that, we will check the legal documents. Ownership. For checking the ownership, you will check the legal documents. Assets in possession. The auditor should satisfy himself that such assets which are shown on the balance sheet were in the possession of the client. These are in the possession of the client. The client is using these assets or not at the date of the balance sheet. On the date of the balance sheet, they will check whether the company is using these assets or not. These are in the possession of the company or not. The land, the building, the machinery, the furniture, the company is using these. The position is with the company, or somebody else is using these assets and liabilities. Valuation of assets. Then we will check the valuation of assets, that proper valuation is done or not. Like depreciation is properly applied or not. The value which is mentioned in the balance sheet, historical cost concept, it is followed or not. Historical cost concept means if you purchased an asset for $1 million, suppose you purchased it in 2001 for $1 million. In 2020 or 2021, its value is $3 million. So you will not show this asset for $3 million. You will show it on $1 million. Historical cost concept means that asset will be shown in the balance sheet on the cost at which it is purchased, not at the market value. So we will check whether it is properly valuated or not. And we will check whether depreciation is charged or not. Proper depreciation. Which method is used for depreciation? And whether the method of depreciation it is consistently followed or not. So all these things we will check these in valuation of asset. Auditor should also satisfy himself that all those assets which are shown in the balance sheet are properly valued. There are different factors which determine the basis of valuation. Valuation depends on different things. Nature of business, object for which the assets are held, and the nature of assets. So different things are included in valuation. It depends on the nature of the business, for which purpose you are using that asset, etc. Valuation of liabilities. Auditor should also satisfy himself about the liabilities, that these are properly valued, which are shown in the balance sheet. The value of the loan that is shown, the value of liabilities which is shown in the balance sheet, these are properly valued or not. Overstated or understated liabilities do not give a true picture about the financial position. Sometimes the companies, what are they doing? They are overstating or understating the liabilities. And you will overstate or understate liabilities, so it will not show the true and fair picture of the financial position. Suppose assets, liabilities, honor equity. Now, suppose assets are $100,000, liabilities are 49,000, and honor equity it is 51,000. Now, if this is your condition, nobody will give you loan. So, for taking loan, sometimes companies, what are they doing? They are understating. Suppose they are writing their liability at 40,000 and honors equity at 60,000. But when auditor will come, he will check this thing. If he found this thing, he will report that thing. So maybe sometime companies will understate the liabilities or will overstate the liabilities. So for this purpose, then the balance sheet will not show a true and fair view. These are overstating or understating the asset, the liabilities to misguide the lenders. Lenders from those people from whom you will take loan, like banks and financial institutions. So, overstatement and understatement of liabilities, auditor will come and he will check this thing. Correct valuation, auditor should pay special attention to this point, because profit and loss account also depend upon the accuracy of valuation of assets and liabilities. We discussed about valuation of assets, valuation of liabilities. Now, correct valuation means that these are correctly valuated, because profit and loss depends upon the correct valuation of assets and liabilities. The object of valuation is that balance sheet should show a true and correct view about the financial position of client firm. So the main objective of valuation is that the balance sheet which is shown, it is showing a true and correct view of the financial position of the company. Purchase by proper authority. The auditor should also satisfy himself that the purchase of any particular asset was made by the order of empowered person. Like, if you people remind, previously we discussed about the purchase system. So when there is purchase, so department will send requisition to the purchase department, and then purchase department will send a purchase order to the supplier. So auditor will check whether the purchases which are made, these are according to the policy or not. And if there are some special purchases, so for special purchases, you will take permission from the top management, from the board of directors. So auditor will check this thing, whether permission is taken from the empowered persons or not. In this respect, auditor may check the legal documents or resolutions of the directors and shareholders. They will check the resolution. Suppose if the company purchased land, so they will check whether in the resolution of the directors and shareholders it is mentioned or not. Because without the permission of the top management and without the permission of shareholders, you can't take big decisions. So auditor will check whether permission is taken or not. So these are the techniques of verification. Now we are going to discuss the advantages of verification. Now, following are the important advantages of verification. Check on fraud. If there is proper verification, so the chance of fraud, it will be less. The chances of fraud reduces due to verification. It saves the business from embezzlement, misuse. Nobody will misuse because everybody knows that there will be proper verification by the auditor. Due to this, management is not allowed to misuse the assets for their benefit. So the management, they can't misuse the assets for their benefit. It is also a moral pressure on the employees, and there is also a pressure on the employees. Pressure of what? Pressure of verification, that there will be verification from the auditor. So employees, they can't misuse the assets of the company. So if there is proper verification, so there will be a check on fraud. There will be a check on the assets. There will be a check on the misuse. Nobody can misuse. Management cannot misuse the assets of the business. Performance evaluation. If there is verification, verification is very useful in evaluating the performance of the management. When auditor is coming, he is verifying and he is vouching. So at the end, they are presenting a report. In that report, they are also evaluating, with that verification, they are also evaluating the performance of management. Auditor can give his remarks about the performance of management through verification and valuation. When they are verifying and they are evaluating, so in that they are also checking the performance of the management, whether their performance is good in utilization of assets and liabilities or not. Keeping in view the remarks of the auditor, management can improve its work. And if they will keep the remarks of the auditor, they can improve their performance. The management can improve their performance. The next thing is proper use of assets. Just like we check here, there will be no fraud. Same is the case here. Proper use of assets. The assets are properly used for the business because due to the fear of verification. officer never misuse the assets. If there is a pressure of verification, so officers, they will not misuse the assets. They know that verification will disclose the misuse, and if they will misuse, the verification will disclose the misuse. So there will be a pressure on them that if they will misuse the assets, auditor will come, he will verify, and he will disclose the misuse. So he will not misuse. Safety for creditor. Verification is very useful for creditors. Creditors are those people from whom we are purchasing the material, the raw material, or from whom we are purchasing goods on credit. So, the audited accounts provide satisfactions to the creditor, and they supply the goods and services to the business on credit. Now, if the accounts are audited, the creditors can trust the balance sheet and income statement of the company, and they will supply the goods on credit. But if the accounts are not audited, the accounts are not verified, then they can't trust that balance sheet. So they will not provide goods on credit. In other words, it guides safety of creditors. If the accounts are verified, it is guiding, it is a guideline for creditors. Basically, suppose if your accounts payable, it is too much, it is very high, but you are showing that our accounts receivable are only $10,000. So this is to misguide the creditors. But if these books are audited, these books are verified, so the creditors can trust these, and they will sell goods on credit to the firm. Protection to the lender. Another reason, just like we discussed here, that sometimes we are overstating or understating the liabilities. So if you are overstating or understating the liabilities, this is showing that you are misguiding the lenders. When you are misguiding the lenders, so it is not a good thing. So what will you do if the accounts are verified? So it will be a protection to the lender. Lender can trust the verified accounts, the audited accounts. If the accounts are audited, they can trust, the lenders can trust that balance sheet. Proper verification removes the risk of loss. The risk of loss of lender. The lender can rely on the audited report of the auditor. He can rely on that, which determines the ownership value and position. They can trust that this is the ownership, this is the value, and this is in possession of the company. The things are in the ownership of the company, in the value, and they know about the value of the company, and they know about the position of the company. But if the accounts are not verified, then lender will not trust these accounts. Proper valuation of assets. Verification is very useful for the assessment of assets value. When auditor is coming, he is also checking whether the assets are properly valuated or not. There are two types of assets, fixed and floating assets. You know about these. Both the assets are verified in different ways. So there are different procedures for verifying these assets. Due to verification, the correct valuation made by the auditor. Then after verification, he is making the correct valuation of the assets. So if there is auditor, he is also making the proper valuation of the assets. I think for today it is enough. Inshallah, in the next class, then we will talk about the remaining advantages of the verification. There are lots, so inshallah, in the next class, then we will complete it. Have a good time. Assalamu alaikum.